Hello traders, welcome back to Nova channel and let's continue the gold trading plan today. A professional trader never trades on a whim. They always have a clear plan that seamlessly combines both technical analysis and fundamental analysis. Today, we're going to create a complete trading plan for this week based on the gold chart and economic calendar so you can learn to read the market and act with discipline. And now let's start with the gold chart on 4-hour time frame. And here's what we see. You can see that first main trend. The chart shows a very strong and clear uptrend. The price has been consistently making higher highs. Regarding to resistance zone, the current price is very close to the 88, around $3500 level. This is an extremely important resistance zone, and there's a high probability of a consolidation or correction. And lastly, relating to support zone, a nearby and notable support zone is around $34.20. If the price corrects from the 88, this could be its first stopping point. And the chart is telling us a story of a market that is very hot and might be approaching its next breakout point. Now, let's look at the economic calendar to see what events might affect the chart we just analyzed. This week is packed with high-impact news for the USD, which is marked with red icons. You can see that early week, which is Monday and Tuesday. On Monday is a bank holiday, but the market will move with a high volatility. Always stay alert and set our guard at the highest level. Always remember to set a stop loss level to protect your capital, and trading psychology is stable. And on Tuesday, you will see that we have PMI data for manufacturing and services. These are important indicators, but they usually only create moderate volatility. On Wednesday and Thursday, GLTS, ADP non-farm and unemployment claims. This data provides deep insight into the health of the U.S. labor market. And on Friday, this is the most important day. We have the non-farm payrolls and unemployment rate. This news had a potential to create extremely strong price spikes, potentially moving tens or even hundreds of pips. And also we need to pay attention to in the early of September. The news relating to interest rate cut will be public by Fed as well. The fact that gold and the USD typically move in the opposite directions means that good data for USD could push downward pressure on gold prices and vice versa. And now we will move to the next part of today's video. And here's how we combine both elements to create a smart trading plan. On Monday to Thursday, the market will likely consolidate within a range before the major news at the end of the week. This is when we should limit our trading or only enter trades with a very small volume. High probability setups will appear after the news is released and the market has absorbed the information. And on Friday, when we have non-farm payrolls news, this is the most important day, and we need to be extra cautious. Let's avoid news trading. Do not enter a trade 15 minutes before and after the news release. The volatility during that time is extremely dangerous, and especially for beginners. And regarding to trading scenario, let's wait. If the news is good for the USD and gold falls sharply, wait for the price to retrace slightly and look for a sell setup. If the news is bad, wait for the price to retrace and look for a buy setup. And strategies for the two main scenarios on the chart. First scenario, rejections from 88. If gold's price hits 88 and forms a strong rejection candle like a shooting star, we can consider a small sell trade with stop loss just above the 88, with a profit target at the $34.20 support zone. And the second scenario is 88 breakout. If the price breaks the 88 forcefully, we will wait for the price to retest at 88 zone. If the zone becomes the new support, we can enter a buy trade with a tight stop loss. And as usual, you will see my setup gold price for gold trading plan today. In conclusion, a complete trading plan includes not only chart analysis, but also consideration of economic events. Technical analysis tells us what and where, while fundamental analysis tells us when to act. By combining both, you will have a significant advantage in the market. Apply this mindset to create your own trading plan, and always remember, discipline is the key. I wish you success and see you in the next video.